We're back. Let's do Ask Annex. You know what I'm going to say. Fred, you want to say it instead?
Go to our website. I don't know by heart yet.
Okay. If you want to get one of your questions on the air, you head to our website, annexwealth.com. Look for the Ask tab. Should I have asked you, Matt Morzy?
I wouldn't have had
All
it
right.
memorized.
Let's meet everybody. Fred Coleman, CFP and a wealth manager at Annex Wealth Management. Welcome.
Thank you, Danny.
And we got Matt Morzy, investment team manager, also a CFP.
Hey, Danny.
All right. Question number one on Ask Annex. My son is all revved up about the FIRE movement. Have you seen it work? Whoever answers this needs to explain FIRE first.
Yeah, so the FIRE movement stands for Financial Independence Retire Early. And the fundamentals of this movement are great. I really like them because we all know the earlier you start saving and the more you save, the better off you'll be in the long run. And when you do this FIRE movement, you're talking about saving sometimes 50 to 70% of your income. So it's really extreme. And if you write the numbers down on a sheet of paper, it works every time. There are two areas where I've seen people get into a little bit of trouble or a little bit of caution that you need to take. The first thing is that it's a very long time horizon. So if you're retiring in your 30s or your 40s, you have no clue what's going to be happening in your 50s, 60s, 70s, and even 80s. You don't know it, but you'll have health changes. You'll have future grandkids that you may want to send to college. You may want to do family vacations. Tax rates could be substantially different from now and 40 years from now. So the big thing is to really stress test your financial plan. Prepare for the what ifs. What if I change the state I live in? What if tax rates jump to astronomical amount? What if Social Security changes? All those things are important things that a lot of people who do the FIRE movement don't take into consideration, and that's one of the places I've seen it not work. The other thing that's overlooked with the FIRE movement is just the social aspect of the FIRE movement. When you retire, even if you're 50 or 60, it can be isolating. So if you're retiring at 30 or 40, all your friends are still going to be working. So you may not have that many people to talk to. So I would suggest, have someone else do it with you so you have somebody to hang out with, and also, just a partner to make sure that they're saving along with you.
Aren't you living like a hermit? I mean, seriously, if you're saving what? How much? What percentage?
I mean, some people are, 50, 60, 70% of their income.
Right. So, I mean, you might as well be in a cave.
Yeah, I that's certainly an element to it for sure. And this is something I've read about for probably 10 plus years. I think it's really, really interesting. However, the conversations when I get home about what we would need to do, it usually stops pretty quick right there. You can't take your family to Disney while also trying to do this at the same time, unless you're really, really good with credit card reward points, which a lot of these people tend to be. There's a really, really big movement. A big part of this is online on blogs in terms of writing about it, and these people that are detailing their story as they go through this. The interesting part of that is they also make money off of those blogs, and even though it's retire early, what they really mean is retiring from that 40-hour-a-week, 50-hour-a-week job and picking up a hobby that also makes money at some point, which for a lot of people it's blogging or now podcasting as well too. So they're not necessarily fully done, but it is really interesting. And yeah, you do have to sacrifice a lot. What is really helpful in a lot of those blogs, though, is they detail what they do, right? So, a lot of people spend money on Amazon to buy books. Well, there's a library that you could go to for free, and then they're going saying, what other events does the library have? What are all the free things that we could go do? Like here with the zoo, is free on certain days. So if they're going to go to the zoo, it's going to be that day. So they're really highlighting a lot of those. But I think it's a really interesting movement. But yeah, what you really hit on at the end, Fred, there is that you're 40 and you're at the McDonald's getting the coffee during the day and you're spending a couple hours there because there's nothing else for you to do. So that is a hard adjustment there.
Yeah. You got to be 70 to do that.
Yeah, they might kick you out of the McDonald's.
Next on Ask Annex, I believe I know what it means when a stock is rated as buy, sell, or hold. What does neutral signify? Also, with sell, does that literally mean people should sell?
Yeah, it's a good question because when you watch, CNBC or different programs or read, a lot of times you're going to hear that type of language from analysts. Neutral generally is going to mean that you're neither bullish nor bearish on something. So whether you're indifferent as a whole, or if you're managing a portfolio against a benchmark, you're going to be at a neutral weight or right on that benchmark. So, internally here, we might say that we're overweight equities or underweight equities, but a lot of times we're just neutral equities, which means that we're going to be at the line that for that risk tolerance is kind of that long-term average that we want to be. So, popularly, a lot of people talk about the 60-40 portfolio. If you're at 60% equities on that, you're neutral on equities. You're not overweight or underweight, you're neutral. And then on the sell side, does it mean that people literally should just sell? I would never just buy or just sell because somebody on TV or you read an article that says to do that. It always should be in context of your portfolio as a whole, your financial plan. These decisions should not be made by someone who doesn't know your situation.
All right, let's sneak one in real quick. Can a revocable living trust continue on for generations in the future by adding or removing trustees?
Well, the key is revocable means that the trust can be changed at some point. So it's important to change it while you're alive to make sure that when life situations come up, maybe you have kids, maybe your kids get married, that you're changing that trust to make sure that it reflects what you want when you pass away. Because once you pass away, it becomes irrevocable. So whatever that trust says, that's what the trustees have to follow.
Fred Coleman, CFP, Wealth Manager on Ask Annex. Thanks.
Thanks, Danny.
And Matt Morzy, Investment Team Manager, also a CFP. Thank you.
Thank you.